It's a very important day for Bitcoin because if Bitcoin is going to break down from the $65,000 regions, we would expect it to begin, or at least have our first set of confirmations beginning around today, maybe even tomorrow, especially at the daily closure. Very, very important one, as it is going to be not just the daily, but also the weekly for CME. Other than that, it would imply the other thing on the other side, perhaps that Bitcoin is going to dig itself in, that we do see a higher low just above $6,000, and that all of this is essentially an opportunity as Bitcoin does go sideways here, as it does prepare for a nice upside movement. Anyways, now that we've gotten through that, we're going to get into some statistical setups, but start off with the biggest meme of the day as I stare at this damn blindly bright light yet again, but it's pretty damn good. The quality is actually increasing. The technology is increasing as we go to the chart view right over here. And what do you know? It is everyone's favorite meme, which is, of course, the herp and derp. We got a left herp, we got a derp, and then we got a right herp over here. If you were watching these videos even just 4 days ago, or about 3-4 days ago, we were calling out a potential for the same thing. Now, I'm not a big pattern trader. I usually kind of look at them as silly, except for a few different patterns. But I do want to say that if you are a pattern trader and you were looking at the herp and derp, it actually was likely already negated a couple days ago, or 3 days ago in this case, as the right herp is now a little bit too much drawn out, and we don't see that symmetry that you would expect on a herp and derp that is, more likely to work out. Which, by the way, herp and derps have low 60% probability to work out, generally speaking, across all different markets. And in this case, people who are calling this one out right now, it really feels like one of those scenarios where it's like seems a little bit too obvious to be true. Doesn't mean that it can't work out, of course, but at the end of the day, if you are looking at this as a realistic herp and derp, well, where would your neckline be? It would be right around here, which means that it is not confirmed to actually break down as long as Bitcoin is trading above Wednesday's low. If it does trade below Wednesday's low, okay, then you technically would have an implied target, I believe, at low 50,000s, 50,800-ish region, which technically still would be an ever so slightly higher low for Bitcoin here on the higher term time frame. So, if that were to play out, I think it'd just generally be another opportunity. I have my reasons as to why I think that's a little bit less likely, but at the end of the day, my opinion is irrelevant to the equation. It's statistics and probabilities that we are after in this case. So as I reference my notes right over here, and the likely meme that you're going to be witnessing very, very soon, I do want to say that on the other side of things, it's actually quite important because we do see, whoops, I just went to the wrong thing. We do see that the daily RSI is going to have potential for regular hidden bullish divergence here, as it does essentially bounce in the neutral zone with lower lows on the daily RSI compared to not just the February lows, late February, but also the very early February lows, where Bitcoin was trading at $42,000. So we're talking about $42,000 and $50,000 respectively, which would imply that we will, whether Bitcoin bottoms here at just above $60,000 or maybe even $10,000 lower, that hidden bullish divergence will be available. Now, I do think that this current area right here is probably more likely, at least for an extension of this bounce attempt, which has already traded 10% off of the lows, to be fair. I mean, that is a significant bounce, no doubt about that. But just for perspective's sake, this is building and this will be present. And just like before, we were looking at potential bearish divergence as being a consideration, a concern for a decent pullback in the couple weeks past. Now it's the other thing on the other side. So as always, I don't want to get too wrapped up in just one side on this channel. I want to be able to, or at least hopefully be able to recognize the shifting probabilities in each, on both sides. Anyways, so now that we've gone through that, I also do want to go over the daily stochastic momentum pivot. Now, yesterday we did say that it had a chance to close above. The pivot was 67,500. Of course, Bitcoin closed below that by actually a pretty good margin, $2,000 below it. So where's the pivot at today? Well, a couple things here. First and foremost, the pivot is at $68,000, meaning that if Bitcoin does close above $68,000, that'd be a pretty damn good indication, at least for myself, that Bitcoin's very likely to trade back up towards $70,000 and probably beyond. This would very likely be the next major higher low in the long-term trend in general. The second thing is that the daily stochastic oscillator is now right at the edge of the bearish control zone. So you would be expecting a bounce here as well, just by the nature of getting there. It doesn't always happen like that, but there's usually at least an attempt, from the people who are taking the signal on the break of the critical zone right here. So ultimately, when I'm looking at this and putting the puzzle piece together, I do think that, again, just from what we've seen thus far, a bounce is more likely than not, or at least another bounce attempt on this current move. But that is all maybe even secondary to what we're going to go over now, which is one of my favorite traditional market charts when it comes to cryptocurrency land, and it is Coinbase. Coinbase on the daily does have hidden bullish divergence, and it's actually already confirmed here as well with the daily RSI back into the bullish control zone. Remember, Coinbase trades on traditional market schedule, so it is having the weekly closure today as well. And the weekly, as it is very close to putting in a bullish engulfing dildo. If it closes above 271.65 today, that will be a bullish engulfing dildo, and it won't just engulf the prior, but it'll actually engulf the last 2 weeks, and very likely Coinbase continues on. And I do believe that Coinbase is still one of the more obvious charts here long term, as we've been bullish on it for a very, very long time now, since basically October of 2023. And I do still think that this one is probably going to reach above $300 before we do see a potential monthly correction. So in this case, if Coinbase closes above that today, I'd look at that as likely a green light for Bitcoin. Again, maybe not this exact second, but overall that the $60,000-ish region will hold, and you will see up and to the right after that. And of course, I will be wrong. No, the chart will break down very likely if you do see anywhere below Tuesday's low, which is 216.16. Any time within the next couple days, basically. Okay, so now that we've gone through that, I did want to go over the HPDR over here, the HPDR bands on CME. We can see Bitcoin has found its footing around the bottom side of this green range low here, which is the 78.6% of historical returns range. So, what does that essentially imply? It essentially implies that there was 11% probability that we're going to see Bitcoin actually close below this region, and thus far it has held. Yes, there's been wicks below. That's fine. It's completely fine. And it does seem like Bitcoin's starting to level out. So I would be looking at that as, again, similar to yesterday's video, an area that if Bitcoin does close below, okay, look out below. That would be a big indication that this one is going to play out the herp and derp, and the meme is going to turn into reality, and at least into the mid 50s, and then maybe even potentially as low as very, very low 50s. Definitely possible as long as Bitcoin's within this range. Basically above or below between yesterday's high and low. That is certainly a possibility. I do think that we probably do see this scenario resolved today, however, because if I go back to the setup that we looked at yesterday, remember the daily setup, which is just a VMP setup when we see extreme lows on VMP alongside a daily uptrend and a 3-day uptrend as well. We have seen these statistics as relevant coming off the back of that. And if we go into the performance summary, the average amount of bars in losing trades is 5. So if the average amount of bars in losing trade is 5, and it did fire off on Tuesday, so it's been 1, 2, 3, working on day number 4 now, I would say that if we're going to see this one actually fail here, we'd start to see that likely come back down today. So if you do see Bitcoin especially close below yesterday's low, which is 64,500, that would be a big warning signal. Where is full on confirmation? I mean, below obviously the Wednesday low. So one thing before the next, of course. That also implies the opposite on the other side. If Bitcoin does remain above these numbers coming into the next couple of days, especially, probabilities from a timing perspective are going to start to shift in favor of the Boo laws. Now, I want to show you another setup that I was just playing around with this morning. It's pretty simple here as well, a little bit more complicated than the last one that we looked at, but basically it is an HPDR related setup where anytime that we do see closures below the 61.8 level alongside an increase in volatility, actually represented by the HPDRV, it has led to these statistics over time, and you will notice a very, very low hit rate. Basically 1 out of 3 trades work in this fashion, as it is using VMP to take profit. But because it does have decent risk management, you do see that the equity curve is up and to the right. Just another example that you can have a very low hit rate, but if your risk management is on point and your profit taking makes sense, you can still actually make a decent enough strategy. as this one's been tested over the full history of Bitcoin. Anyways, the reason why I bring this one up is because it's more relevant to the long term compared to the one that we were looking at over here. This one more relevant to the short term. If we see a losing trade on this one, it's probably going to take around 5 days on average. If we see a winning trade, it's probably going to take around 14 days on average. And the average return for the winning trades was 22% versus 8% on the losing side. So, I mean, there's still pretty fucking big numbers, to be honest. But if we go over here to this one, and we look at the performance summary, we can see that the average winning trade was 41%. So now we can start to really come up with an area of interest if Bitcoin does play out the positive side of this, somewhere between 22 to 41%, which I imagine puts Bitcoin on significantly new highs. And the average losing trade on this one, again, is 9%. So the average loss for both of these setups is very similar. But the average amount of time taken on these winning trades is 58. So this would be a much more long-term setup, basically talking about the next couple of months. Okay, well, between now, essentially, and the next couple of months, what happens? We see a halving, we see some other shit probably, and what would that essentially imply? It essentially imply that if this one does work out, like we're probably looking at this area as a base. Bitcoin can spend some time around here, yes, but from this base, we'd expect Bitcoin to launch somewhere between 22 to 44%. So 22% up is upper 70s. 44% is actually, oh shit. Oh fuck. They done did it again. Sounds like some pornog sounds over here. That's actually about $40,000. Just saying. Within a couple months. So I don't know. Should I put out a good clickbait YouTube title? I always want to be, backing that information up. But I think when you have hard statistics to actually look at something like that, well, yeah, it is relevant at least as far as we're concerned in the next couple months. If Bitcoin plays out the upside of this, which this particular setup, again, does have a rather low probability, 33.33%, 1 out of 3 trades, basically. So for the redacted people out there, understand that 33.33% is not the same thing as 100%. For fuck's sake, it's not even close to 100%. But you said, sir, holy fuck, how do you get dressed in the morning? That's a real question that I want to know answered. You let me know in the comment section below, because I will be reading them as I always do. Because actually we have a pretty fucking cool community, and it's actually really, really fun to communicate. But every once in a while you get some crazy people. It is what it is, man. And I expect more craziness to come as this market cycle continues. More and more people get interested. But, for the most part, what I've seen with this community is that it's self-policing. Like, it seems like the people who've been here for a while, the normal, well-adjusted people, like, they don't even, down talk like the new people. They just kind of make fun of them, which it's actually hilarious. It actually is hilarious. Anyways, Redacted are of course welcomed here as well, because I am the king of Redacted. I am Redacted myself as well. That's why I stare at fucking charts all day. So anyways, we spoke about the upside. We spoke about the downside. We spoke about the potential severity of the downside as well as the upside as well, where those sort of pivots and triggers start to fire off as these higher term timeframes, align with each other. I do understand that, especially after Bitcoin's been more or less vertical for the last few months, this sort of sideways action is boring to most, but it's the same thing as before. The boring times are the more important times, and this is actually still pretty interesting to me compared to what we saw in about a year ago from now. It's super fucking boring. So fair enough. I'm just rambling on now. I apologize about that. As always, want to wish you the best. I should have let you know, however, that if you are interested in using tools like this to automate your back testing, and you can test out any strategy that you really can think of with the skeleton key / Krown Quant automation service. You can also actually automate execution, and we now have a tutorial of how to connect it to MetaTrader, so you can use it for traditional markets as well if you so desire. And the link is in the description below. It's on sale right now until the end of the month for all subscription payments. It's the biggest sale that we've ever, for 35% off on everything. And then all the other programs and services also have the same code for 20% off. And I should probably maybe I should tell you what the fucking code is. happy 6 years. Same one as before. All good. I think we'll end right there. As always, want to wish you the best. Take care. Much love, and see you hopefully tomorrow.